Good afternoon, everyone, and welcome back to PBA at Noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. Today, we have with us Anaconda Mining. Anaconda is a gold mining development and exploration company focused in Atlantic Canada. The company operates mining and milling operations in the prolific Baie mining district of Newfoundland. They recently announced $12.7 million in revenue from the sale of 5,105 ounces of gold in the third quarter. Anaconda trades on the TSX, the big board, under the symbol ANX. With a strong valuation upside and strong cash position, this presents investors with an optimal entry point. Here to tell us more about the company is CEO and President Kevin Bullock, and joining him is the CFO, Robert Dufour. Welcome, gentlemen, and please start when you're ready, and we'll take questions from our viewers following the presentation. Thanks.
Thanks very much, Paul. Happy to be here. And good morning or good afternoon, everybody. Anaconda Mining is, as Paul said, a producer in Eastern Canada and the Atlantic provinces. And everything I say here will be forward-looking statements about the future, and therefore please read the forward-looking statements on your own time, which is incorporated on our website. We're located in Eastern Canada, the Point Rousse project in Newfoundland, in the north, in the Verte Peninsula. We also have a development project called Goldboro in Nova Scotia. And we've been able to have free cash flow generation for the last 10 years, no matter what the gold price has been. But recently, in the last few years, with the gold price moving upwards, we've been able to build a very strong treasury and a robust balance sheet. And we continue to have free cash flow generation. Having produced 18 to 20,000 ounces of gold for the last several years, we realized that to grow the company, we need to considerably expand. And we've established a very aggressive platform for growth. We're targeting 150,000 ounces of gold per year within the next 3 to 5 years. We believe to do that, we certainly need to keep producing at Newfoundland at our Point Rousse operation. We have 100% ownership there. Again, this first half of this year, we generated $7.8 million in EBITDA in the first half of 2020. It's excellent infrastructure with long-term tailings storage capacity, and there's no camp required as there's a town nearby. Everybody goes home at night. We mined 3 different deposits in the past, now, or in the future that we'll take you through. But for the long-term future, we've picked up a very, very exciting exploration concession, Tilt Cove Gold Project, about 40 kilometers east of the producing mill. This is something we have just started to drill. It's had limited drilling in the past. It surrounds a high-grade previous gold producer that produced at just under 10 grams per ton. And we have a development project in Nova Scotia, which is currently the largest gold project in the province, sitting at about 1.4 million ounces of resource. We are carrying out a definitive feasibility study on that right now, and I'll take you through that a bit in further slides. We think that we've got the right assets, the right people, and certainly a nice cash balance in the bank to achieve our goals. And what we really want to stress is that we have an experienced mining and financial team. Myself, I've been involved in various projects, various companies, Kirkland Lake Gold, IAM Gold, taking it from private to public. Volta Resources, a company that I started, was sold for over $100 million in 2012 to B2 Gold. I'm still a director of that company as a result of that transaction. And Rob Dufour, who's with me today, he has been involved in several similar stories, Newmarket Gold, Kirkland Lake Gold, and so on. So we've got a very experienced team moving forward. I'll turn it over to Rob Dufour, who's also on this call with me to take you through the financials of the company.
Thank you, Kevin. As Paul mentioned, we trade on the big board. We have 150 million shares outstanding. We currently have just over 60 million warrants outstanding. Those came on board mostly when we acquired the Goldboro Gold Project. However, they are all in the money and they all come off in the next 12 months. As Kevin alluded, we have a very strong treasury, which makes us fairly unique in that we built it up over time through free cash flow and some premium financings. We have a debt position of the current debt just over $2 million. That was a debt, a loan that we put in place for $5 million with the Royal Bank of Canada to really push forward on the Goldboro Gold Project. We did that at 4.6%. I don't know many junior mining companies out there that can get cost of capital at 4.6%. In terms of a shareholder base, we are still mostly retail. However, we've seen some very strong institutional interest of late. And most notably in July, we did a charity flow through 45% premium financing with SSI Asset Management, which is a very respected precious metals fund out of Switzerland. And were very keen to see us aggressively pursue our growth plan. As Paul mentioned, we're in the Baie mining district, maybe not as well known as some in Canada, but very prolific, lots of gold. And what's the key differentiator for Anaconda? Lots of exploration going on in Newfoundland right now, but what Anaconda has is the infrastructure, the people, the skilled workforce, operating mill, long-term tailings capacity. You cannot undervalue that. And what that means is we now can fast track from discovery to development. And we've done that successfully over the past 10 years. The Point Rousse, relatively small mine at 18,000, 19,000 ounces this year, but it's the engine behind our growth strategy. It generates great cash flow and great margins. We'll do this production at about US $900 an ounce, all in sustaining costs, about $1,150 US. Excellent margins at today's price. And the first half of this year, we generated $6 million Canadian in operating cash flow. That's after paying for corporate overhead. That's after paying for salaries. So we can really push forward with our growth programs. Here's a great picture of that infrastructure that I mentioned. And one of the most notable things is right in the middle of that picture is that in-pit tailings facility. At our current processing rate, we have 15 plus years of tailings capacity in pit, the most environmentally friendly way you could do it. To build that amount of capacity in Canada, you'd be upwards of $50 million in capital, not to mention the time to permit, which is getting longer and longer. Here's a great example of leveraging that infrastructure. The Argyle gold mine, we're developing it now as we speak. We have ore coming out. Because the infrastructure exists, this for the next 2 years will provide mill throughput. And at a conservative price of Canadian $1,900, this will generate after tax, after capital, cumulative cash flows of over $12.5 million over those next 2 years. But of course, we're in a great gold market. And what that does is provide tremendous leverage to the gold price. We've been selling at Canadian 2,500, 2,600, 2,700 even. Yeah, at those gold prices, this project over 2 years will generate over $25 million in after-tax NPV, and the IRR is off the charts at 12.73. Also, it works the other way too. Gold could come off almost $1,000 Canadian. This project still generates free cash flow after tax. That's the ability that we have to leverage these assets.
You may ask yourself, what after that? It's only a 2-year mine life. And that brings us to the exploration portion of this presentation. And what we found along the scrape trend is several targets that we've been either mining or exploring. The Pine Cove pit is on the west side of this map. The Argyle deposit that we're currently mining is the northeast end of this map. And then there are targets in between, Stoggertite being a deposit that we mined a couple of years ago. But we've since found Zone 278, which happens to be the extension of the Stoggertite deposit. And we've been drilling that with some very interesting results. It's a new discovery. It's never been drilled before. You can see from the picture, there's a lot of mineralization in the core. It looks like the same type of mineralization as we have at Argyle and Pine Cove. However, the intersections are wider and higher grade than we've seen in the past 10 years. 5.5 grams over 20 meters, 4.5 over 15, almost 19 grams per ton over 5 meters, and so on. So some very good results, and we believe this will be our next mine after Argyle. We've always had a 2 to 4 year mine life at Pine Cove, and we've had that for the last 10 years, and we still have it today. So we think we'll keep finding for the near term. For the future, though, as I mentioned, Tilt Cove, 40 kilometers to the east, this surrounds it's a 20-kilometer strike length of the Greenstone Belt that also encompasses the past producing Nugget Pond mine, which produced at just under 10 grams per ton value to the mill diluted grade. So that's a very high grade that produced a lot of ounces for Richmond at the time, and it closed down when the gold price was $260 or $70 an ounce back in the 90s. We can trace the banded iron formation that hosts the mineralization for the 20 kilometers. And we have this entire belt tied up with transactions, with prospectors, and our own staking that we've done over the last 2 years to put this entire belt together. It's one of the best exploration sites I've ever seen in the world globally. And it happens to be in Canada, in a first world, 40 kilometers away from the only producing mill on the island, which we happen to own. So we're very excited about getting into this and exploring it. And we just have put a drill on site, and we're drilling the numerous targets that we have. Just to put this in perspective, the Nugget Pond Mine, which can be seen in the southwestern area of this map, you can see the hashed polygons around it. These are the gold in soil anomalies. We're looking for duplicates of what we see at the Nugget Pond Mine along strike, and you can see them to the east, numerous targets around the ponds with indicating the shore. And we're spending the next 3 months having a major drilling campaign on these targets. The first target that we're on, where a drill is right now, has never been drilled before. It's a 1 kilometer long anomaly of the banded iron formation that has over 100 grab samples, which are over half a gram, and the highest ones being in the 40s and 70 gram per ton range. So very high grade. The bottom left picture is a picture of the mineralization projected to surface. You can see the road right there. There's an access road. It's very easy to get to. And we're drilling that right now. This is the first time that there's ever been a drill hole in this target. There are numerous other targets called Growler with similar types of grab samples. About 12 other key targets and hundreds of secondary targets. So we'll be on that for a while. That brings us to our development property in Nova Scotia. We purchased this property back in 2017 and have been working it ever since. It's the eastern extension of a series of deposits that were owned by Atlantic Gold, but St. Barbara acquired Atlantic Gold last year for $720 million Canadian. And we currently have the largest single gold deposit on the island east of that. It's in an area called Goldboro for a reason. There's past production there. You can see a picture on the right of the actual projection of mineralization to surface. It's 2.1 kilometers long. It's a series of stacked anticlinal zones, which are very high grade. And what we've seen recently is a halo around this grade in some areas of this mine, which make it much more attractive than we originally thought as an underground mine. And we're now looking at it as a much larger open pittable deposit in our feasibility. The resource that we have there is just under 1.4 million ounces, but we continue to drill this with infill drilling, and we have a 15,000 meter drill program going on right now. And we look forward to releasing results on a regular basis for the next several months. Currently, we have 57 stacked veins that we've discovered. When we purchased the property, there was 24. So we've more than doubled this deposit, and we'll be putting out a new resource calculation at the end of this year that we believe will have a significant growth to it again. Our technical team sees this over time, once we start mining and drilling more, to being well over 3 million ounces of gold. It's open in every direction, and we keep hitting gold. We've drilled it as deep as 550 meters deep, and we're still hitting the mineralization. This is similar to the Fosterville deposit, whereby some of these go down for several kilometers at depth, and there are some very high grades within it when you start understanding the ore body. We plan to, this particular slide says we'll have a feasibility done by the end of 2020. We've been looking at it again, and we've been looking at optimizing the project because we have time before permitting is complete. And it's looking now that this feasibility will take longer simply because the project is getting bigger and better as we infill drill. So we look forward to releasing results from that. Company-wide, we have 5 drills turning. We're going to drill well over 20,000 meters in the next few months, with a lot of results coming out. With a resource estimate at Goldboro by the end of the year. And then we'll be the next year working hard on getting the final permits in place, hopefully by the end of next year, to start building a substantial mine in Nova Scotia to add to our production. That, with a discovery in Newfoundland to keep the mill going up there at a higher grade, will get us over 100,000 ounces a year. And part of our strategy is also looking at M&A transactions as we keep creating value within the company to tack on to hit our target of 150,000 ounces a year within the next 3 to 5 years. It's aggressive, but it is doable, and we have the right assets and the right people. And we've been able to provide a lot of focus into the company to get there, and we're well on our way. So I'll hand it back to Paul, and I'll stop sharing my screen, and we can open it up.
Excellent. Thank you so much for the presentation. So we have a couple of questions. Let's start off with the obvious question, gentlemen. How has COVID impacted your operations, if at all?
Well, we are in Baie Verte, as mentioned earlier on, which is a peninsula in northern Newfoundland. This in itself is its own bubble. And the island of Newfoundland does not, as far as I know, did not anyway, a little while ago, have any cases of COVID on the entire island. So we're on a bubble within a bubble. And the Atlantic provinces have their own bubble where they're allowed to travel internally, but not outside of that. So they've been doing very, very well in keeping COVID out of the area. They do have a few cases here and there, but not anywhere near us. We've never had a case, and we've put significantly strong protocols in place to ensure that we don't bring it into the area. So it has not affected us, I would say negatively. It has affected us positively in that we're spending less money on travel. The gold price is going up because of situations due to COVID in some instances. That affects the price of gold positively. So we're actually making more money now than pre-COVID.
Oh, that's excellent. Do you have any royalties on your properties?
I'll turn that over to Rob to answer.
At the Point Rouge project, there are a bunch of individual royalties. So at the Argyle project, for example, there's 3%. It's over a few people, but 3%. And there's a net profits interest over that series of properties there held by Royal Gold, although it hasn't been payable in the past. It may become payable in the future. And with the Goldboro Gold project, that project is completely unencumbered. There are no royalties on that. Till Cove, which is it's a very large land package that we've consolidated for the first time. There are various royalties through some of the stake, through the options agreements we've done there, but virtually all of them are capped. So usually at 1.5 to 2 million. So we keep a kind of tight lid on that as we can.
Okay, that's good. So going forward, this is a very large question for you. Going forward, where is your main focus going to be?
So, we have focus, as I said, we've got a 3-pronged approach to getting from where we are now to 150,000 ounces a year. And the first prong of that is our focus, our biggest focus at the moment, and that's developing Goldboro. So, in moving Goldboro forward, we're working very hard. We have 6 or 7 different consultants doing various things, but it's all led by a company called Nordman, who's doing our feasibility. We have several groups working on the permitting, and we've been doing so for the last 1.5 years, and we're well on our way through the process that you have to do with Nova Scotia. And it's probably important to mention that we've had 3 open houses at the site where people can come in and state their any kind of concerns they have against a mine being built in the area. 3 open houses, hundreds of people through. We've never received one concern, just a lot of resumes. So it's definitely our focus to get that going. But we're not losing focus of a discovery, and that's why we have so many drills turning, and why we keep, why we're very happy to have a cash balance from our engine that keeps producing. And then M&A is a very active campaign of looking at properties near to us, but expanding worldwide for things that we think would be accretive to our company. We understand that mineralization doesn't respect political boundaries, but we do. And we won't go anywhere that's unsafe. We won't go anywhere that's perceived as a hard place to work, but we will want to tack on something to achieve our goal. So we look at bite-sized projects around the world. It's been a little slow lately because of COVID. That's where COVID has affected us, not in our operations, but in our ability to go and do site visits. So, we have 3 prongs, we focus on them all, but the most important thing for us is to increase production with the most doable one, which is Goldboro will become a mine. We just have to go through the process of permitting and creating the feasibility so that we can go out and get project financing to build it.
So you touched a bit on, your relationship with the community. so brings me to a two-pronged question. Has the government of Newfoundland helped you guys in any way? And the other question to that is, are there any Indigenous issues?
We have been very fortunate to be working with the Newfoundland government. The Newfoundland government is very helpful, very mind-friendly. It's maybe easy is the wrong word. It's a process that you have to go through for permitting, and they're not there to stop you, they're there to help you. And we've found that with every project we've permitted projects where we've had to reroute rivers and pump out ponds and had no issues in Newfoundland whatsoever. And we have no Indigenous rights issues there. In Nova Scotia, there's only one Indigenous group that we work with there. It's called the Mi'kmaq. And we have such a good relationship with them. And me personally with Chief Terry, the chief, where we've already signed a memorandum of understanding for a joint benefits agreement to help with the Indigenous groups there, provide them with all the information they require and training. We'll help them train to apply for the jobs. We won't give jobs to them. We will have them apply and base our decisions on who's best for the job, but we will provide training so they can be involved in that. So we have a very good relationship, a very good plan, and we want to give back to the communities around us. Including all stakeholders.
That's a wonderful initiative. So this is another question that comes in terms of the royalties and the projects. Do you own the project outright, like the land itself?
We own the mineral rights.
Okay.
Outright. Excellent. And then the royalties are off of what you produce from those mineral lands. So we don't have joint ownership.
And then maybe this is a question for both of you, actually. Do you plan to buy back any of the royalties, or because they're capped, you're comfortable with where they are?
That's a great question. Rob, perhaps you can answer that.
Some of the ones that are in place in around the Point Rouge project, like Argyle, they actually do have caps, but those caps are pretty far off that we probably would never hit them. Some of the Till Cove ones do have some buyback provisions, but realistically, that's quite a ways down the road, and we'll assess that as we move forward and hopefully discover something in that area.
Yeah, it's important to add at Till Cove that most of the deals we did there are capped, and they're capped at $1 to $1.5 million. They're not material if you were to build a mine.
And I think just a point to really what's going to create value going forward in the near term, especially, is going to be the drill. Is going to be drilling and developing out the resource. We wouldn't use capital right now for buying back royalties. It's about discovery and growing production.
An all-time favorite question. Given all the positives, why is the share price languishing lately the past few months relative to other Canadian-based gold miners?
So when I joined the company a couple of years ago, it didn't really have the focus. It was happy producing 18 to 20,000 ounces a year. A good year was when gold went up, and a bad year was when gold went down. And I was hired to come in and put a plan together for growth. We've been executing that plan. We're significantly higher in share price than we were, and in market cap, probably 3 times higher, 300% higher since I joined, because we've started to turn the ship. We are nowhere near where we should be, and that's a result of we were turning the corner, we were getting the share price going up, and then we hit this block, this period over the last little while and going forward for a little while, where there are a significant amount of warrants that are coming due. And a lot of people, in order to exercise warrants, will either short the stock or they will sell some of their stock to pay to buy the warrants. So you have a lot of selling pressure. The good news is the liquidity has increased tremendously, which means there's also buyers at these levels. So our guess is that when that cleans up and the warrants, which I think will also bring in about $4 million in other cash as they're exercised over the next few months, really. I think the biggest tranche is in January. There's some that come due at the end of this month. They bring in money, but they also free up, some of the selling pressure. So over the next little while, you'll see that change. I would hope, if all else is equal.
Oh, that's a great thing for shareholders to look out for. So we have a couple of questions related to Goldboro. So let's start off with any guesstimate on the capital cost and how bank financing, and I guess how you'll finance it is the question.
So the feasibility that we're working on, we looked, as I said earlier, at optimizing the project and looking at infill drilling and seeing because we had time, according to the permitting timeline, we had time to optimize the project. And in doing so, we found certain things about the project that it looks like it's going to be much, much bigger and different than we originally expected. And therefore, we're redoing the timeline for the feasibility. As I said earlier, that it won't be by the end of this year. It'll be longer than that because it's a bigger and better project. We do not know the CapEx, but I can say to you that it won't be one of these CapExes that were, in the $500, $600, or $700 million range. It's more like the $100 to $200 million Canadian range. Very doable for a company of our size. And as there was a second part to that question, I'm sorry, but I forget what it was.
It was how you look at financing that.
Yeah, so I'll turn that over to Rob.
Yeah, well, I think, right now, we're probably 12 months out to really hitting the ground and looking for, term sheets. But, I would see it being kind of a typical project financing with some debt and equity. We would like to do as much equity as possible, just keep the project as unencumbered as, and, with a lot of these different catalysts going on in the company, who knows where the share price is going to be then. But, I think there'll be a combination, with that debt. And I think what we're going to have is some great options with the debt. Being a small company, debt tends to be expensive, but we've had a lot of interest as we've been out talking to groups and a lot of the names that people would probably know for that debt piece. It's a highly attractive project for them. It's in a first world country, highly stable jurisdiction. CapEx amount, even though it's, we're moving, is very reasonable, in a very robust economic project. So there's a lot of people who would like to come in, take a big piece of it because it really lowers their risk profile. Plus, we work with a lot of the kind of the local bankers to develop those relationships. So I mentioned earlier, RBC, we're getting capital at 4.6%. Those are the relationships that we're also developing, so that when it comes time to Goldboro, as part of that debt piece, there'll be a syndicate of different parties that we think we'll be able to do this at a pretty attractive cost of capital for a small company.
Okay, so 2 more questions here on Goldboro. What is the infrastructure currently on site?
There's a power line that goes to within kilometers of site that will be extended at the cost of Nova Scotia Hydro. They'll do it themselves to bring the power in. We'd have to put up the substation. So we've got power to site. We don't have to use generators. We've got roads to site because it's a past producing area 100 years ago, quality gravel roads to site. There's a town and a port nearby, a small port within 6 kilometers. We will need a camp because it's getting to be a big project, and we'll have to house, especially during construction, 200 to 300 people, I'm sure, or more. And that's it. There isn't any other infrastructure. There isn't any, which is good news. There aren't houses or buildings or anything that have to be moved or towns that have to be moved. It's a very good area to work. Rolling hills, no significant infrastructure that can create us problems for bridges or anything like that. It's just drive up to site in a car right now if you want.
Oh, excellent. Would you consider spinning Goldboro out?
We always look at opportunities based on the merits and what's best for shareholders. And if it's accretive for shareholders, if we get proposed an offer and it's accretive for shareholders to do so, we would consider it and bring it to shareholders and they would decide. So the answer is yes, under the right circumstances, but our overall plan incorporates us building Goldboro and finding more ounces to keep the mill going in Newfoundland and creating a bigger, better company. However, that could be done with a spin out and combining with other things that are Nova Scotia based or Newfoundland based. So it all depends on what's the best for shareholders.
And a shareholder related question. Would Kevin and Rob be a buyer of Anaconda stock at these prices? 3% management holding does not seem too high. Do you guys want to address that?
Well, yes. It's public knowledge what the CEO and the CFO make as a salary. Rob and I have put more than our salary each. We haven't made a single penny. We haven't kept a single penny. We put all our salary plus some into the market, buying this stock on the market. People can check that on the SEDI reports. We continue to buy all the time. Currently, we're in a blackout, so you probably see that we've not been buying over the last little bit. That is not because of the price. That is because we are currently blacked out in between our financial, until our financials. You will see us in the market again. We're not founders of this company. We joined because we saw an attractive portfolio of assets that needed focus, and we're providing that focus. But to get our position in the company, we've paid for it like everybody else, and we continue to do so.
Well, thank you, gentlemen. Paul's joined us. Paul, do you have a question or two for Kevin or Rob?
Yeah, in your Newfoundland, would you be milling for anybody else? Is there anybody else around you that you could mill for them?
We provide our feed to the mill and it fills the mill. That's the most attractive situation we can have. And we foresee continuing to do that. There may be opportunities in the future whereby we could mill at the back end of the mill to do some concentrate for people overseas, because the largest deep water port in northern Newfoundland is on our site that we built. And we could haul in concentrate from other mines around the world that either have problems permitting their own facilities and would ship it over. And we could do that and expand that way. Those are future opportunities that we keep in mind. However, for now, our goal is to fill the mill and keep it filled.
Is the mill permitted for X amount, and do you have to go get re-permitting, like to make it larger?
Yes, if we wanted to expand the mill, it would require permitting, which isn't like permitting a mine or anything. It's just permitting a different process capacity with the government. We don't foresee that in the near future. We don't see needing that. What we see is it's a 1,300 ton a day mill that's currently making a lot of money mining 1.6 gram material. Our goal is to find closer to the Nugget Pond type material at 10 grams and put it through the mill. That wouldn't need any increase in capacity, but imagine putting 5 times the current grade through the mill. What that would do, that would make it a 100,000 ounce a year producer with a single drill hole. Could start the process of looking at that at Tilt Cove.
Okay, and now with your drill programs in place, when should we expect some drill results to start coming out? Like, are the assay labs backed up, or?
We have a very good relationship with the labs, and we've negotiated with them. It costs us a little more, but we're having turnaround in about 10 days, which is fantastic at these times. With the gold price up, everybody's drilling. The labs are filling up, but we've got priority. And we are announcing drill results already. There's been some that have been put out a little while ago, and we'll continue on a regular basis.
Okay.
From various projects.
All right. And do you have any production estimates for next year? I mean, guidance.
Yes, we do. I'll hand that over to Rob.
Yeah, I mean, we'll put out the formal guidance, but given we've put forward the Argyle mineral reserves, and that is going to be over the next 2 years. That between stockpiles will give us 2.5 years on the books, official reserves that we could talk about. So I suspect, I mean, working through the budget process, so don't want to hem us in too much, but probably in around the 18,000 mark. And most of that will be coming from Argyle, which from a mine grade is about 2.06 on reserve. So from an economics perspective, will still be very strong.
All right, perfect. Well, anyway, gentlemen, you've got some great projects going. You're already producing. The price of gold is cooperating. It's like 1909 right now live. So thank you so much for today. Very much appreciated. As you know, I'm already a shareholder through the Orex acquisition and the warrants that you were talking about earlier. So we'll continue to follow your story and keep everybody updated. And again, thank you so much for your time today. Much appreciated.
Thank you, Paul and Sophie. Thank you for the time.
Yes, thank you,
gentlemen,
everyone, for joining.
Take care, everyone.
Thank you.